Cory Chapman. I am the Director of Client Services. I get the honor of introducing someone who's very special. He's my very best friend, the father of our beautiful 3 children. He's got a smile that just radiates the room, right? Yeah. You are in good, trusted hands when it comes to working with him. And with that, Mr. Cory Chapman.
So guys, I am so excited to be here today. I'm excited to share with you guys some insight about our State of the Union. You know, these guys went through snow, had to come cross country, cancel flights. These are the guys who, for all intents and purposes, help us make your retirement successful.
I'm Garth Waterfield, Senior Vice President at Investors Heritage. My grandfather actually started the company. We'll jump into our first product. It is the Heritage Income Advantage, and it truly is that. It guarantees you an income payment for the rest of your life once you turn on that income. Hopefully, no one in this room will ever need to turn on, but if you have a long-term care event, it will double your income payment for up to 5 years. The next product is our Heritage Growth Advantage. We guarantee renewal rates for your indexes for the 10 years or the 7 years that are there. So the one that Cory really talks about, and I think puts a lot of y'all into, is the Morgan Stanley Index. So in that 1-year average across the entire year, that index returned an average of 16.5%. That's a hell of a return. You've got the floor of 0%, so you're never going to lose any funds that you've put into it. You only have the potential of a very big upside.
If you could put money into an account that you couldn't lose any value, how many people would put money there? All right, let's look better. How about if you put money in an account that you couldn't lose any money and you could get these returns? Does that make sense? So I would say probably about 75% of you in this room have this product, okay? If you haven't been looking at your statement, you're gonna be wowed by what your returns came out to. And this has been something that we've used for your sound fiscal house in the foundation and the walls, right? So this is that safety part that we talk about, right? Now, the thing that I thought was so unique about this is, Garth is kind of being mild about this, but this is not normal, okay? Just telling you guys for real. This is a way for you to have a product that's equivalent to like your basic savings or checking account that you're not losing any money on, but at the same time, you're getting these types of returns. Nowhere else are you getting that right now. One of the clients came in our office, they were up almost 27% in 1 year off of this product, okay?
How are we able to do what we do is because we focus on risk management. It's a very interesting concept. You can actually win more by losing less, which is very powerful. If your portfolio is down 50%, that means you have to make up 100% to break even. If your portfolio is down 40%, you got to make up 67%. It's actually what Warren Buffett does. If you lose less, you don't have to make up that much more to catch up. And then your portfolio is in a great spot to take advantage of opportunities. Because Warren Buffett's always buying when the market's down. So this is essentially like a Warren Buffett strategy mathematically. So that's what we do. But like in 2022, 40% portfolio was down about 20%. Our balanced portfolio was down about 10 to 12%. And then in 2023, when it rebounded, the 60-40 portfolio was up 17%. Our portfolio is up between 13 and 14%. So it's kind of that smoother ride and losing less and taking advantage of opportunities. That's our core philosophy.
Essentially, we work with the best advisors in the country, and we are facilitators. And the way that we've built our company is by providing those tools and resources for the best planners. So we do all of the due diligence in the background to provide the tools that Cory needs so that he can build the right fiscal house for you. That includes the wealth side, annuity side, and then if you need any Medicare, supplemental insurance, or life insurance, we have all those tools. Now, a big thing I want to talk about is tax planning. So traditional tax loss harvesting is done at the end of the year. Advisors wait till the end of the year, they look and say, do you have any losses in this portfolio? And then they go in there, they sell off some losses, and that offsets your gains in a taxable account. Well, what we've been able to do is we've built something called direct indexing with tax loss harvesting. We've broken that out to daily. So we can monitor your accounts daily. But when the market's down 30%, there's going to be a handful of your investments But if they're net negative right there in the middle of the year, what we can do is we can sell off that holding and immediately reinvest it into another stock. And that gives you a loss on paper, but you're still invested. But essentially, this is an account that has about $1.4 million in it, and their cost base is about $830,000. They started in this program beginning of January 22, and so far we've saved them about $60,000 in taxes that they would have paid. So we're out there doing all the work to try to find those tools so that Cory can put them together for you.
How many guys in the room feel that taxes will probably go down in the future? Did I make a joke? So we're all pretty much feeling like taxes will probably go up. Is that about right? Well, so it's interesting because if you look at President Trump to be his tax plan, the first thing he's talking about is that he wants to keep taxes about the same. We're probably in the all-time low that we've been at in a very long time right now. The highest tax bracket right now is what? 37%, right? I remember when taxes were in the 1940s were over 90%, okay? When's the best time to buy something? When it's on? Okay, so if the best time to buy something is when things are on sale, right now, because we're in a lower bracket, this may be the best time for us to start reducing some of our tax liabilities. Does everybody get that? No one told us that when we retired that a big part of our retirement was going to be hinged on the taxes. Do you guys remember having that conversation with anybody? No, right? If taxes go up, that means typically you have to take more money out of your investments to pay for those taxes. If it costs us more to live, then we have to take more money out of our savings to continue to live the same lifestyle. This is why it's so important to understand your strategies. Warren Buffett, to me, at the end of the day, is one of the epitomes of planning and strategizing, okay? And, you know, he had a saying, it says, rule number 1 is never lose money. Rule number 2 is never forget rule number 1. Pretty simple, right? Well, our thought process is kind of very similar. Never invest more than 55% of your investable assets in the market. We believe in that. And let me explain why. Most clients have walked in our office, they say, hey, Cory, I tell you what, I know that I am diversified, but because I'm diversified, I won't lose money. Being diversified just means you're spreading the risk out. At EFC, we measure risk by something simple. If I can lose $1, it's at risk. And if that's the case, then how do I alleviate being more open to risk? What if you can grow that money without taking the risk? We just heard 𝗀𝗃 talk about an annuity, fixed index annuity that's paying double digits. Is that better than a savings or checking account? Wouldn't you feel more comfortable doing something like that without losing money all the time and worrying about every day I look at my market, I lost more money? That's the whole reason why you guys are coming to us. You want to not take too much risk if you can help it. But at the end of the day, you want to still grow your assets, right? At least do better than inflation, right? When we started creating our strategy around the sound fiscal house, it was basically because we wanted something that would be simple. Right? When you came into your review, you could say, Cory, my roof is leaking. I'm going to understand that means we're having not such a good time in our growth of our portfolio, okay? But if you said to me, Cory, I'm so excited because the walls have generated a lot of cash flow, I'm like, great, we're doing a good job there. So it was always centered around finding simpler terms that you guys could remember. When most people come in our office, all of their assets are in the risk category. They're still all invested in the stock market. It's not unheard of that when you walk in my office, all of your bulk of your assets are in your retirement plan, sitting in your 401k plan or your pension that's going to roll over as well. And if that's the case, all that money at that point is tied to the roof. It's tied to the risk market. So when I look at this portfolio, I see that $1.6 million is all on the roof, nothing else on here, and you got another portion of your money in your chimney that's got cash. It's out of proportion. It's out of sync. It's not diversified properly to give you the result you're looking for. When it comes to retirement, you're now changing your psychological mindset. Because when you were working and you had a job, you knew you always had a what? A paycheck. Always. Isn't it a little different when you're now retired and there's no guaranteed check coming in every month? Now is where the money you have is the money you have. When we start taking funds out of our account, You've been wanting this sports car all your life. And when you came to me, you said nothing about a sports car. You said nothing about a second home. You didn't tell me you were going to fund 2 more grandkids through college and grad school. And I tell you, your money will last to age 100. So when you say, Cory, I needed that $75,000. Let me tell you, it was a cherry apple red car. I've been wanting this Corvette forever. I didn't see that in the plan. In the plan, we have $60,000 a year going out for income. So you basically just told me now there's 1 less year of income. Please help me help you, all right?
My name is Sydney, and I have the immense honor and privilege of serving as the Director of Operations for EFC. And my mission in this role is to lead our team to deliver a level of excellence that just redefines expectations in our industry. Ultimately, our purpose is to change the lives of 1 million families. We are extremely dedicated to helping people live the life that they want to live now. We simplify wealth to level the playing field to help you win the money game. In order to win the game, you have to know the rules. And that's why we're here. We're more than advisors. We're educators. We are partners in your success. We want nothing more than to help you guys live the life that you've always envisioned. When we partnered with Advisors Excel in 2016, since that time, we've maintained an average growth of 29% year over year. It's impressive that 29% growth rate with 1 advisor on board. But Cory is more than just an advisor. He's a trusted voice when it comes to financial planning, when it comes to wealth management. He's been on every cover that you could think of. He's written articles for every news outlet and has been just about on every TV show. Not to mention, he's a best-selling author, so Mr. Chapman, is there nothing you can't do? And now, thinking forward, we have Jonathan, there's nothing that we can't do. And we've had the immense privilege to welcome 28 new families to EFC this past year.
Volatility at its simplest form is just when there's a sudden swing, either positive or negative in the market. We get a lot of calls in from clients asking, especially with the new election, what do we think the market's gonna do, and our philosophy behind it. There's 5 major things to think about, or I guess tips when you are dealing with volatility. The first is to be patient, not to act on emotion. Second is not to overthink it. Third is the biggest point, in my opinion, which is to resist your emotional instincts. So it's really just the mindset overall on how to plan better. And the fourth being to stay diversified. So really this is something that we don't look forward to, right? But it's something that we plan for.
One of my personal intentions was to get over to you that you really are a part of something special. And I think you know that, but I really want to kind of dig in and make sure that you are aware of that. We've seen so many different scenarios over and over and over again. So there literally is very rarely something that you can bring to us that we have not seen or encountered. The true scope of our operation is not that small berg at the top, it's all of these partners at the bottom. Part of how we're able to be elite is because of the relationships that we have. And while our office may be a team of 8, our business itself is an amazing, amazing business connected to organizations that manage over $1 trillion in assets combined. I guess what I'm trying to get you to see is that you are a part of something special and you are a part of something that is growing and expanding. And more importantly, you are in good, trusted hands. I want to welcome you to EFC Jeopardy. These are your categories: the people of EFC, EFC History Trivia, the Sound Fiscal House, which you all should get that right, financial terms every retiree needs to know, and then, of course, Cory Chapman Trivia. The Sound Fiscal House for 5. How does EFC define risk? If I can lose $1, then that dollar is at risk. The answer is Bo and Bailey. Yes. That table wins 3 tickets. Now, this person always seems to qualify as an elite ambassador, so we just love and appreciate Ms. 𝗀𝗃𝗲𝗰. And I would like to acknowledge Jeffrey. Jeffrey retired last year in April of last year. I would like to call up the one with the doctor's handwriting, Patrick Hayden.
He has been like one of our biggest referrers. He's a retired battalion chief in the fire department, so thank you for your service. That's a big deal. And all my ex-firefighters, raise your hands in the back, so say thank you for your services as well.
Thank you, thank you, thank you, thank you.
The person that we're going to call up here is our newest member to our Black Club. She was referred to us by her sister, who is also a member of the Black Club. And I say this because they come to every event. They support us on every level, okay? If there was ever someone who was dipping their toe in the waters, this person was that. But finally she jumped and splashed in big. So we really appreciate her. We're excited about her coming on board. Miss Nancy Kwan.
Yay!
I was looking at how long I've actually been in this business. It'll be 29 years in October. One client was going to be here today that's been with me for 25 years, and I wanted to recognize her.
He's a big old softie.
Because when I first started, I knew nothing, okay? And she came, okay? I want to welcome Phyllis Walker up to the stage. Yeah, this client, I got to tell you, she is a Black Club member. She is an ambassador. She's like one of our favorite referrers. She showed up at all our events, a lot of fun. She's the one that sent me the pictures from Disneyland yesterday on the road. She is blue, blue, blue. Fun, fun, fun. Let's give her a round of applause for retiring this last week. Congratulations.
We've got some gift baskets that you get to win. Many of us, I know there are people that are close to me, have been affected by these wildfires.
What we're trying to do is raise as much money as we possibly can for the people who we're trying to donate to, right? But the goal is to give back to the community, and that's what we're trying to do from there.